Okay, so what kind of situation do we currently have on US oil? The market, from a monthly perspective, has created this very nice overextended M formation, followed by this retracement. After obviously the huge crash to the downside. Now, if you want to measure this retracement, what are you supposed to be doing? Taking your Fibonacci from the high to the low of the impulse. And what you can see is that currently the market has just hit the 0.618 Fibonacci retracement from a monthly point of view. Clear, perfect touch of it and rejection. It just what was an immediate rejection. So from a monthly perspective, we can expect more weakness. We go down on the weekly. Now on the weekly time frame, everything is very clear. The market has created an impulse to the downside, retracement, continuation to the downside with a lower low, and then more than 100% retracement. Now when you see this thing in the market, impulse correction, continuation to the downside, so creation of a lower low, and then the market makes a more than 100% retracement, creating a higher high, the market has basically created a W formation. And after W formation, you expect the market to make a retracement. And then we can see the continuation to the upside. So after the lower low, if the market retraces more than 100% and creates a higher high, the market has created a W formation and you expect a retracement back to the neckline. And this makes a lot of sense also here from a price action perspective, because definitely the market seems overextended to the upside and it needs some breath before continuation to the upside. So immediately from the monthly and weekly, we both have a bearish view in mind with our target down at this weekly neckline before the continuation. We go down on the daily. On the daily time frame, things start getting a little bit more complicated. Why? Because you have to notice that we also have this level here. Now, in all of this impulse to the upside, there is one candle which is not related to the move to the upside, which is this red candle here. Now, this red candle is a strong demand area at the moment for US oil, acting as structure, and we have a high probability of the market actually reacting to the area. But it doesn't really matter if the market will bounce away from it. If the market will bounce away from the area, we will simply have to adjust the analysis, because anyway, we will not be looking for any kind of shorts until the market is above this zone. We need to see first the daily time frame create a break of structure. So for example, if the market bounces away from here, the next structure will be here, and after the market will break back below the structure, then we will be looking for the continuation to the downside. But the simple concept is this. Probably we will see the market create a minor rejection, and then the market will actually break the structure to the downside. If it will not, we will simply have to adapt to the new structure. But the point is that we can't be looking for a short until this previous resistance or support is holding. But after and when the market will actually break this level of structure, then what we will be doing? On the retest of it, this previous support will be turned resistance. And at that point, we will have the monthly time frame that has a bearish view, the weekly time frame that has a bearish view, and also the daily time frame that doesn't have support anymore but has resistance. And that is where we will have the best probabilities and best risk to reward to be looking for the continuation of the weekly, for the completion, of the weekly W formation. So after the break, on the retest, we will be monitoring price action from a 4-hour perspective with students, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside. Now, if you enjoyed this free analysis and education, make sure you drop a like and a comment. It really does support the creation of more free education and analysis for all of you, and I will see you in the next video.